Hi guys, this is Tim from Trading Strategy Guides. My plan is to show you our cool shooting star candle strategy. Wonder if you guys would give me a sound check, video check. Let me know you can hear and see. You should see this really cool trading setup here that's not mine. Hi guys, can you hear me okay? Check, check. Thanks, Fernando. Okay, well, I'm going to show you the shooting star candle strategy, but first I want to talk about a couple of things. I've always got something to talk about, don't I? Okay, well, the first thing is this. If you're watching the recording of this webinar, you can speed things right along by clicking that gear icon in the lower right-hand corner and changing the speed. Sorry, you guys watching live, you're going to have to settle for the other benefits you get, like being able to talk to me. Remember to stay around until the end. We got cake and cookies, but you'll have to come to Texas to get them. Sorry about that. As usual, though, I'll have a trading maxim for you at the end. I got about 35 or 36 of them now. So we're not even halfway through them yet. Now, here's the thing that I'm most excited about. Look at this Bitcoin right here. Flight yesterday to the tune of about $1,000, not quite $1,000. Settled in around 800. And no, I'm not in it yet. I didn't get in Monday's bar because, well, you see, there wasn't very much volume, and I wanted to see a break of this volume trend line. And this volume trend line's a little bit misplaced right now. Every time I close the chart, it moves my trend line. But right there's my where I wanted to see. And obviously, yesterday we got a huge, huge volume move. But this has just moved too much to get in. That's the reason why I didn't get in yesterday. So, the arrows, as indicated, I expect it to move up and pull back and retest this trend line. And I'm in this top of this triangle. When it hits this top of this triangle, I'll definitely be in it long. I'll be on that like white on rice, unless it's brown rice, of course. And then yeah, I digress. So I am considering taking a small position, like a quarter-size position, on a 50% retracement of yesterday's bar, with a stop below the 30. I'll before I stop that out, and then of course if it gets all the way back down to the bottom, I'll be on that. If it pulls back with huge volume like this, then I probably will just wait to see what it does. Always watch for volume support on your trades. I do want to say this. I love to be right. And, I wasn't right about the direction because patterns like this typically break in the same direction as the incoming trend. But I was right about the fact that there was an explosive move after this huge, long consolidation. Okay. Um, I do hate it when I miss getting into these, but, uh, it's nice to be right, but it's even better to make cash on your rightness, if that makes sense. Just don't get the FOMO syndrome on that, the fear of missing out. There'll always be another trade. Don't jump into this just yet. I mean, it may continue moving, but at some point it's going to pull back some, and that'll give you an opportunity to get in. And always remember my first trading maxim. Would you rather be in a trade wishing you were out or out of a trade wishing you were in? There's a link to this original video down at the bottom. Okay, Monday I talked about Papa John's Pizza, the Shaq strategy. They announced Shaquille O'Neal, who is for those of you outside of the U.S. who don't know, he's a huge former professional basketball player and just an all-around great guy. And they put him on the board of directors to try to their slide. They've been pushing up pretty much. Now, the market's got to breathe. So, it's kind of like me at the gym. I can push and push and push, but at some point I'm going to have to stop and breathe. And that's what the market does. So I think we're taking a little breath here. But I still really like this on a close above this level with volume support. Remember, always volume support. A bounce off this 50.37 might be nice too for a tiny position. So always remember though, volume support. And the other thing, and I linked the original video down the bottom here. And the other thing is, let's see, Friday I talked about Tesla. Tesla's having some real problems now, and some of their stores so that they can get their Model 3 out. I'm not sure if they've actually released their Model 3 yet, but their Model 3 is a really nice, like sport luxury model. So I'm just super impressed with Tesla and Elon Musk and all of his innovative. But I'm not going to take a trade based on that emotional stuff. What I want to see, we've got some moves above this original trend line. I've added a new trend line here that follows these two candles. That's why trend line's kind of a fickle thing. I say that a line is never just a line, it's always a zone. And when you start drawing trend lines, angled trend lines, there are always a lot of different places that you can put the, and I think every one of them is valid at some point. So now we've got a little consolidation happening in between these two lines, but it still has not gotten any volume consolidation here. And again, every time I open and close these charts, it moves my volume trend lines. But I really want to see a blast, just like we saw on Bitcoin. I want to see a blast, a volume blast above here. Interest is still waning here, though. The volume is dropping off. The volatility is dropping off. So, this just needs to explode. Okay. And like I say, I really like Tesla, but that doesn't matter. I can really like Tesla and do my cheers in the background for him, rah, rah, ree, and all that stuff. But I'm not taking the trade until I see real technical reasons to take it. Okay. Okay, I've run my mouth enough about everything except what I plan to talk about. So let's get on that right now. If you have any questions, post them in the chat. I may not get them right away. I promise I will answer all your questions at the question and answer period, and well, all your trading questions. Somebody asked what they could ask questions about, and yeah, let's try to stick with trading. I'm not too good at life questions. Okay, we're going to talk about shooting star candle strategy. All right. First, let's talk about what a shooting star is. A shooting star basically is a bearish reversal chart pattern. Okay. This is kind of what a shooting star looks like. Obviously, the body can be bullish or bearish in the form of a bearish reversal candle. A bearish candle is better But if the candle body is real small, then that doesn't matter. It's okay if there are lower wicks, but they need to be, significantly smaller than the upper wicks. All right. The upper wick should be about 2 or 3 times or more the length of the body. Okay. Obviously, a bullish version of this would have a long wick at the bottom and the small wick and the body at the top. Okay, but we're just going to talk about the bearish pattern right now. Just know that everything I say about the bearish pattern works in reverse for the bullish pattern. All right. So let's take a look at one on a candle. I lifted these images from the Trading Strategy Guide's blog about the shooting candle strategy, shooting star candle strategy. I linked that blog down below, so you guys can go check it out. There are more details about it. And the only difference between the training I'm doing and the blog is that I use a little bit different money management strategy than the blog does. I'm sharing the money management strategy and the stop loss and everything strategy that I use in just about all of my trading. Okay. The one in the blog is perfectly good. Whatever works well for you is what you need to do. Okay. Okay. Always remember that anytime you have a pattern, price action pattern, you've got to have an incoming trend. A lot of these patterns, particularly individual candle patterns like the shooting star, happen all the time in the middle of consolidations. But if you don't have an incoming trend, that just doesn't, they're meaningless. Okay. The candles are the footprints of price action, and you got to have the right kind of price action coming into these. All right. Now, this is kind of what's happening on a shooting star candle. At first, what you have to do is you have to imagine this this candle while it was forming. Imagine when price was actually way up here. The candle started here, price was way up here at one point, and in the context of these faux candles here, that looked like a really, really bullish trend continuing on, right? But by the time the candle closed, it had retreated all the way back down to here. Basically, everybody decided that price had gone high enough, and they decided to take their profits. And then when they started taking their profits, then everybody is thinking, oh, reversal time, reversal time. So everybody started loading on short. And as a result, price was pushed back down. And the candle closed near the open or slightly above it or slightly below it. But as you've heard me say before, a closed candle tells a story. But I've also said that closed candle lies sometimes. So, but often it doesn't. And the closed candle can give us the edge that we need to make a profitable trade. So with that in mind, here is the shooting candle strategy. First thing I want you to do is to add the Chaikin money flow indicator. There are probably other indicators that work well with this, but so this is the one I'm going to demonstrate it with. Okay. We use this to confirm or invalidate the shooting star candles we find. Not every shooting star candle is applicable here, and the CMF indicator here that we're using will help us determine which ones are. Just so you know, the CMF is an oscillator that measures the amount of money flow volume over time and fluctuates from -1 to +1. It's calculated using the open, close, high, low, and volume of each candle. Okay, so the next step is to look for a trend. Like I said, got to have the trend. So if you don't have a trend, pass it by. All right. Next thing you want to do is, in the context of that trend, look for the shooting star. Now, it's easy to look at this trend here and see after the fact that, oh, well, here's a trend and here's a shooting star, and then it went down. I'm only showing you these cherry-picked examples, and I'll be showing you some more, because they demonstrate how this trade works. When you're actually trading this, you're not going to see any of these candles past this one right here. You're not going to know whether this is the top of the trend or not. You may look at some of these other candles and think, well, here's one. This could be the top of the trend, or this could be the top of the trend. Well, this was the top of a small breakdown, all right? And it actually would have been a valid shooting star candle. But we're not going to talk about that one right now. I'm just showing you the most obvious one here for the purposes of demonstrating how this should look. Okay, so here's the shooting star that we looked at. When you see the appropriate candle here, the wick is long enough, the body is small enough, there is a tiny wick on the bottom here, no big deal. When that candle closes like that, immediately look down to the CMF indicator, and the CMF indicator needs to be below 0. Okay? On the close of that candle, the CMF needs to be below 0. Now you know the next step is to sell when price for another close. Once this closes, you can put a market order down there. I mean, you can fire off a market order when price drops below there, or you can put a limit order there. I like orders. That way I get in and exactly where I want to. Sometimes, though, there isn't time. So if price is breaking below this candle as you're looking at it, because that can happen, because you're waiting for a close of this candle, then all of a sudden, if this thing below there, you might have to fire that order off fast. All right. If price hasn't moved too far away, you're still good to put that order in. All right. If price is above this close, then I would use a limit order. Then you don't have to sit and watch it. I'm all about not sitting and watching it because I'm likely to be focused on something else. So yeah, if I've got to watch the charts for more than 30 seconds, then I'm going to be looking at something else when it happens. So knowing that about myself, I have to make allowance for it. I use a lot of price alerts and limit orders and that sort of thing. If this thing has already moved down 10 or 20% of your target, then you need to just walk away from it. Don't get the FOMO syndrome. Remember that fear of missing out thing. I recommend using the ATR to calculate your stop loss. So I use 1.5 times the ATR with a minimum 10 pip stop loss. Stop loss less than 10 pips seems a little crazy, unless you're trading like super fast scalping, but that's a whole other story. If the example, for example, if the ATR is 20 pips, my stop loss will be 30 pips. Then I'll take half my position off when the price hits the ATR, 20 pips in my example. And then I'll put my stop loss on my second half or on the remaining at break even, or break even plus 1 or 2 pips to cover my costs. and I'll let the rest of it run and follow stops or use another indicator to give me an idea when to close the trade down. I like to use parabolic SAR for that sometimes. That's what we mean by shutting down your losers and letting your winners run. You hear that all the time, and sometimes it just doesn't make sense. How do you know what's a loser? How do you know what's a winner? You just have to make a definition. What is a loser? What is a winner? In my case, a loser is something that hits my stop loss, period. And I keep my stop 1.5 times the ATR. But a winner, how do you know when it's a winner? Well, take some profit so that you have a little bit of profit on your trade. Then let the rest of it run with stops following behind it. Oh, I don't know. Use the ATR for a follow stop. Keep your stop within, in our example, a 20 pip ATR. Keep your stop within 20 pips of your of price. Or use some other kind of indicator to say, okay, if we use the parabolic SAR, I'm going to back up one chart here. If we used a parabolic SAR, you would see the dots ranging right back here, and they would keep coming down until they were hit and the parabolic SAR reverses. And I'll show you that in a few minutes. And then I would just close the trade. So you may not get all of this move here. You probably get stopped out up in here somewhere. Or if you're patient enough and you're willing to suffer enough pain, you might actually get this push down, or you might hold for this push down right here. Okay. But of course, you don't know in advance these things are happening. So who knows? This push up right here could go way up here. So that's the reason why I always follow stops and use some kind of an indicator. Because if I set my second half to break even and this goes 100 pips in my direction, and then I leave my stop at break even, and then price inevitably bounces back up there, those 100 pips, then this has moved 100 pips in my direction, and I've totally wasted it. Okay? Don't worry about leaving money on the table. What's done is done. So if you get out, let's say you got out right here at the top of this arc, and then price pushes way down and makes a new low. Or you got out here and it pushes down and makes an even lower low. Don't sweat that. Just walk away. Okay? And one result does not tell the story. If this happens one time, don't change your whole strategy just because that happened one time. You can't do that. You got to stick to your rules. Okay? Let's take a look at some examples of this. I got to find my examples first, right? Okay. Here's OddCAD. This is from February. You can see month and a half ago. These are just some examples so you can see. Here's a nice looking shooting star candle, but it is not a valid signal because the CMF is above 0. Okay, so there's this nice trend in the star candle, but no confirmation, so we're not taking that. Might have been stopped out, who knows. So here's a real trend in and a nice shooting star candle right here, confirmed right here. As you can see, the CMF is below 0. So we're ready to go short on a break of this candle. Now, here's one of those iffy spots, okay? I measured these, and this candle actually drops 0.9 of a pip below this candle. Now, if I had traded this the way I normally trade, I would have put a limit order 1 pip below this candle right here. which means this would not have triggered that. Now, if you saw the break below this candle and went ahead and entered the order, you might have gotten stopped out up here. That was just really close. This is the ATR was 12, so the stop loss was 18 pips. This is 18 pips. You might have gotten stopped out on the first one, but I might not have been. It really depends on where price went. If it immediately went down, I might have taken a market order. It's hard to tell in retrospect. I'm just showing you this as an example of what to look for. Okay, and this is how I would have traded it. Let's say, just for the sake of argument, that it didn't break below that level until right in here somewhere, and then it never hit the stop, and first position out here. Then it pushed on down for I think 85 pips. I wrote that down somewhere here. I don't remember. Anyway, if I had followed stops here, then I probably would have gotten stopped out in here somewhere. Okay. Just remember, this doesn't work every time. All right. You know, a lot of other trainers are going to tell you that this strategy tell you that sometimes these lose. Okay. This was a real problem I had when I was learning to trade. I did not understand. I know it's stupid, but I was brand new to trading. This was a lot of years ago. And I did not understand that just because I lost it did not mean that I did something wrong. I thought I was doing something wrong, but no, I was following the rules properly, and that particular trade just happened to be a loser. Okay. Here's another one. Nice push up, nice looking shooting star candle, and confirmed by the CMF down here. The ATR is 20 pips at this point, so my stop loss is 30, which nicely puts us right above that candle, and our take profit is 20. The second half obviously didn't go very far, and probably would have stopped out break even in here somewhere. But the trade wasn't a loser. Okay. This, by the way, is the Aussie CAD 60-minute chart. I like looking at hourly charts because they give me time to focus. You know, if I start looking at 2-minute charts, it kind of makes me a little bit crazy. I do sometimes trade 15-minute chart though. And so we'll look at some 15-minute charts. This is the Euro US dollar. I wanted to point out that this is a really nice looking setup here with this shooting star right at the top of all these candles. But as you can see, this did not quite make the grade. And this is a lot easier to see when it's live, because you'll plainly be able to see that this candle or this CMF is not below zero when you're looking at this chart live. Okay, so that's just an example of one that's an invalid candle. I looked through and found a bunch that I tried to some examples just so you guys can see on real life charts. This one was awesome. Okay, this was not a huge run up, but it was a trend up. This candle happened right here. Now remember, we don't see these candles at the close of this one. All right, all we know is that here's the shooting star. It was definitely confirmed by the CMF below zero. And so price continued on. So I put my pending order, my limit order below this, my limit sell below this candle, 1 pip, and price pushed up. Doesn't matter how high it pushed up because I'm not in the order yet until it drops right here. This picks up my limit order. Yeah, on a big push like this, there could be slippage you know, that happens. There's nothing you can do about it. On your limit order, you tell it, you know, I don't accept more than 1 or 2 pips of slippage. So, and actually I limit, you know, it depends on the strategy I'm trading, but I usually will limit my slippage to 2 pips. So this pushed down, and within the first 15-minute candle, this is again the 15-minute Euro USD, hit my target. Now the second half pushed down potential 85 pips right down here. Now obviously I wouldn't have gotten 85 pips because that's not the way I do things. I have no crystal ball. I have no idea that this is going to be the low for a little while. You see, it's a few hours before it pushes down again. So I'm following my stops. I might be using the PSAR. And like I say, I'll show you that in just a minute. And maybe I would have stopped out here. I probably get 60, 65-ish pips on this, on the second half. So that's nice. Let's see, 10 pip stop loss, minimum 10 pip stop loss. And when at 10 pip stop loss, I'm going to use a 10 pip take profit too. So 10 pips on the second half, and then a potential biggie on that second half. Okay. I think I said 10 pips on the first half. Okay. Another Euro USD 15-minute chart. Here's another one. This was a fairly nice run up right here. Again, a nice looking shooting star, confirmed by the CMF. Stop loss up here, target down here. It hit the target. This one, obviously, caused this move right here, took us out. Hopefully our stop loss didn't slip too much on this, but this should have been a winner as well. Okay, and now Litecoin. This is a 15-minute Litecoin chart. The ATR is 10 cents. So my stop loss is 15 cents. Take profit is 10 cents. This was a really nice looking shooting star, confirmed by the CMF. Never hit the stop loss, hit the target. Okay, let's take a look at this Euro 15-minute again. Gotta find it. Here we go. Nope, that's not the one. There it is. Okay, let's add the parabolic SAR to this. Parabolic SAR. Well, I thought I had that in my favorites. There we go. Should be in my favorites because I like to use it a lot. Okay, so this is probably a little hard to see. So let's make this darker. Okay, so the parabolic SAR consists of these little dots, and you can follow the dots here, and as soon as price pulls back and hits the dot, it reverses and moves the dot to the other side. That's when your parabolic SAR reverses. So in this case right here, if I had used the parabolic SAR, I would potentially have gotten about 91 pips on the second half. Okay. Oswald, buddy, I have got a cherry pick so you can see these examples, how they work. Obviously, this has to be traded live. Um, Otherwise, you're not making any money on me showing you this. But you've got to see this so you know exactly how to handle this trade. All right. Okay. Everybody see what I'm talking about? That's why I like to use parabolic SAR. It keeps me in trades. Came really close to taking me out right here, but it actually kept me in quite a while in that. Okay. Okay. Anybody have any questions, comments? G-Scard, yes, it is recorded. It will be live right here at this same link. Probably, I'm not sure how long it takes to go live after the webinar is over, but probably less than an hour. Okay. Let me see if there are any questions. Good morning to everybody. Online New World from Nepal, very cool. Rotar in Moldova. I use that for the exit. Okay. Let me go back to that live chart. Once I've entered the trade, I've got the shooting star here. I've validated the shooting star. I removed let me add the CMF here. Okay. Got the shooting star. It was validated by the CMF right here because CMF is below zero. So I put a limit order below this candle, one pip below this candle. The limit order triggers on this candle right here. My ATR at that point was 3 pips. So I'm going to use a 10 pip minimum stop loss because 10 pips is my minimum stop loss. So when I use a 10 pip stop loss, I also use 10 pip take profit. That's also my minimum take profit. So hits the first half. I take the first half of the position off right here for plus 10 pips. I let the second half run. And I follow stops a lot behind this. And the reason I do that is because if all of a sudden this thing takes off like a rocket and for some reason I want to, it went 85 pips here. I don't want to stop out break even. You understand what I'm saying? So I'll move this down 20 or 30 pips behind it depends on the ATR. It depends on a lot of things, how far I follow. But with a big move like this, I probably would have set the stop at 50% retracement here for a little while. But then I use the PSAR to exit the trade. And the PSAR didn't trigger until way down here. Okay. Any other questions? Nope. Okay. Okay. If you guys have any more questions, before we're done, or even afterwards, we'll pass them on. If you have any questions, post them in the recorded video, and I try to check them the minimum every 24 to 48 hours. Okay. Okay, you guys made it to the end. Trading Maxim number 18 is a shorty. When in doubt, stay out. If you are looking at, say you're looking at the CMF and it's right on the zero line, and you're not sure whether it's actually below the zero line, just walk away from it. It goes back to Maxim number 1. Would you rather be in a trade wishing you were out, or out of a trade wishing you were in? And if you've ever been in a trade wishing you were out, you will understand exactly what I'm saying. So keep those two things in mind. And if you doubt what you're doing, just, if it doesn't meet your criteria 100% without question, pass on by. Pass on by. Okay? If this webinar was helpful to you, please click the thumbs up below, and thank you for subscribing and hitting the bell. And I will see you with a video Friday and another webinar next Wednesday at 9 a.m. Eastern, U.S. Eastern Time. Okay? You guys have a great day.